Okay, so hello everyone. I'm Isaac. I'm a price action trader following Al Brooks. Um, I'm also here with Johan, also a student of Al Brooks, and I am recording today, December 29th of 2025, um, coming to the end of the year. And just a disclaimer, I am not teaching anything here. I'm just uploading this as a journal and also getting people's feedback, um, especially people who are more experienced and more well-versed in Al Brooks price action than I am. I'd also like to give a disclaimer about the risk of trading futures, uh, which I'm sure you guys have heard before. Unlimited gain, but unlimited loss. Don't invest any funds that you cannot afford to completely lose. For more information, please check the risk disclosure at the CBOE website. Okay, so again, here we are, December 29th. It's a Monday, and here is the daily RTH bar that formed for today. You can see that it went down here and touched with the high of this day, but then bounced back up, ultimately ending as a doji day, but with a small bull body. We've been going kind of sideways here, but then big down, big up. So I think we're just going to go sideways. But for right now, let's also look at the 15-minute ETH. Now, RTH means regular trading hours, so that does not include after hours, only 8:30 to 3:15 Chicago time, and that's why RTH on the daily chart looks weird with so many gaps, because you're not seeing what happened on the overnight. It's not accounting for that, so you just it just wakes up to gaps a lot of times. If you look at the daily ETH, it's obviously much cleaner because it's counting the after hours market. In fact, it's still running right now, as you can see. Like tomorrow's bar is already started on the after hours. So you can see that right there. Okay. Back to the 15-minute ETH. There's a downtrend here. And then the first bar of the RTH started here. Big bull bar, but with a big candle wick. Excuse me. Sorry for the coughing. You know, it's winter time. And as you can see, it was sideways here, but sideways to down before going back up. Now, if we look at the 5-minute RTH here, you'll notice we gapped down, but then we had first two bars were bull bars going back to 50% of the gap, then coming right back down and even going below the low of bar 1, which broke the bull case, but then the bulls came right back up and then started to stall here before the bears plunged back down. And this bears a lot of similarities to what happened on Friday. Right? See big up, then big down. And in the Al Brooks Discord group and in their daily webinars, you'll hear them talk about, I think Rose talks about it, failure of a failure is a swing. And from my experience, failure of a failure of a failure is a trading range. And so that's what I saw Friday, and that's what I saw today as well. Right? Failure of a failure of a failure. And so I thought, all right, well, what are we gonna get today? It's gonna be kind of sideways. But after this bear move down, it's possible that the bears want to get a 20-point swing. So going from 56 and 3/4 to 36 and 3/4, which we just barely punched through. Then the market came back up. So what did this coincide with? 36 and 3/4. Well, if I show you over here, going back to this day, 36 and 3/4. There's a buy zone here, which was also just at believe that's Monday's high. Last week, Monday's high. You can see after this bear bar, and then this bull bar taking the market upwards, and then having a nice trend upwards. I would call that a buy zone. Now, if it were a 30-point swing, it would have been 27 and 3/4. I'm not sure if I'd call this a buy zone here, because we never got there. Yeah. What do you guys think? Let me know in the comments. Johan is also free to comment anytime if he wants to. But coming back here, I drew out this channel line here, and again, I figured it's going to be a sideways type of day, but then hit that target, so sideways down, and then come back up. So we got that target. So we had, we went sideways for a bit here. And then I think this bar, which is bar 25, became a major lower high because we formed a new low afterwards. So it was the market just going here, retesting these highs here. And then coming back to retest. I figured if the bears wanted their 20-point swing, there'd be a retest back to somewhere to get a better entry. So halfway between. So that's 47.5. Oh, 47.5. Yeah, let me fix that. Yeah, 47 and 3/4. Right? And went a little bit above that, but did not go above this high here. So that's good. So we could continue to go down, which we did. Few dojis here. This one had a bull body, but we still made it down there. And in the live market, if you were there, you would notice that it was a fast move. The market just really moved in really quickly, got the target, and then started to calm down. Sideways a bit, started to go back up. Bears come back down, break, maybe just to touch that close. before it started to head back up. And we also broke below the channel. So fake out, breakout. So there was a better chance of breaking out the other way. So the bulls did just that, and they passed this high. I'd consider this a major lower high. Major lower high. So we went past that, and that was it. And then had a pullback. Sure, it was lots of bear bars, but that's coming right after all this bull move, even if it had bear bars in between. Also past this high, this high, this high, this high. So this pullback really is just a pullback. But for a stop order, you wait for confirmation. You get a nice bull bar here, and a confirmation bar there. And if you buy based on that, well, looks pretty good. Here's a 1R around here. Here's a 2R. Getting back to these highs here. And then there's a 3R, which actually coincided with, if you look here, L1 equals L2. So the second half of the day was a pretty nice move for the bears. And you'll notice that, see these lines here? That's prior day, open, high, low, close. So because these lines are on yesterday's, it's referring to the day before. So yesterday, well, not counting weekends, it's Friday, and then not Thursday, that was Christmas, so Wednesday. So look on the daily chart here. We started to go into the territory of this bar. So very small candle wick below the open. So that is Wednesday's low. See that very thin red line, and then this green dotted line is Wednesday's open. So sorry, Wednesday's low, so the lowest point, and then the open of Wednesday is the green dotted line. So that was the opening price. And we got past it. And what I noticed was towards the end of day, with the big institutions fighting it out, I could see that the institutional bears did not want to close above this. They wanted to completely be out of, completely below Wednesday's daily bar here. Right, so they started to push, and the bulls, institutional bulls, tried to push it back up, which they just barely got above Wednesday's open before the institutional bears pushed them back down and tried to push down further to this here is today's open. And the reason they'd want to push there and even get below there is because if you look here, that would mean that this day closes with the bear body. But as you can see, it didn't. And the reason for that is because institutional bulls were able to hold the line there and push back up. So they lost the battle on closing above or below the below the Wednesday bar entirely, but they were not going to let institutional bears get a bear body on the daily bar. So we ended up somewhere in between at the close. And that's why we got this result here. So yeah, it's a doji day, but Let me just scroll here. Little bull body there. Okay. Having said that, I mean, just looking at this, I think it's going to go sideways anyways, but the bulls helped their case by closing today with a small, at least a small bull body. But yeah, so a recap of this is big up, big down, big up, big down. So I thought trading range day, um, but by closing below the low of bar one, I figured it's going to be like, more of a down day, at least to start. But then when I saw more big up, big down, it's going to be also sideways. So I thought, all right. I thought, after seeing the Bulls make a comeback like that, going back, maybe there were some Bulls buying below the low of bar three and they got caught. Maybe they wanted to get out break even before coming back down. And then I figured, um, so Bears wanting to swoop in here, get a 20-point swing. 20-point swing coincides with the buy zone that I pointed out earlier. Might even be able to show you on here. Yeah, crunch this together. It looks very hard. It's very hard to see, but on the 15-minute Globex, but still looking at the regular trading hours, yeah, that looks like a buy zone to me, right around here. Oh, excuse me. Okay. So that coincided with a 20-point swing. Mistakes that I made today is that I thought the Bears would get a 30-point swing. I legitimately thought it was possible. I drew out something like maybe this type of line here. And then I thought, oh, well, get to 27 and 3/4, or sorry, 26 and 3/4. Should be okay. Well, didn't happen. And to be fair, I mean, there was I only had 1 point touching that anyway, so um whereas this other channel here, um yeah, if you put it down here, or even here, you've got points touching like at least 2, 3 touches on each side, on the upside and the downside, the top line and the bottom line. So to me, that just strengthens the case for that channel. Having said that, I think the 30-point swing was possible. We just needed more confirmation. I think breaking below this channel here, that's not as steep, was already going to be a problem. Had we broken below here and then come back for a pullback and then maybe a limit order to go further down, maybe that was better. But hey, at least we got our 20-point swing for the Bears. And anyone who didn't get in right there, I mean, they could just get in around halfway, as I've illustrated here. So yeah. And plus, look at these nested wedges. Look at this wedge. 1, 2, 3. 1, 2, 3. Maybe 1, 1. two, 1, 2, 3. Yeah, well, basically, we had a nested wedge here. So, plus hitting a 20-point target. I think there was just too much going against the Bears going lower. So the Bulls came in, got their L1 to L2. And then Institutional Bears fought over the look of the daily bar at the end. All right. Johan, do you have anything to add, or do you have any? Is there anything that I said wrong? Anything that doesn't make sense? Anything that I'm doing well?
I'll just say, you know, I gotta keep up with the markets, you know. Yeah, I mean, yeah, I'll probably pitch it more, you know.
Okay. Um, so I know you're still going through the Al Brooks video course, and I'm on my second run of it too. But from what you've learned so far, is there anything from my analysis today that makes sense to you? Okay. Well, I mean, we both got a lot of work to do, like, let's be honest here. So, um, yeah, if there's nothing else, if you can't think of anything right now, then yeah, it's all good. I'm just hoping that other people can see the video and give some good constructive criticism. Hopefully people who know better than us. We're not the experts here. I mean, I think I'm pretty good, and I'm almost consistently profitable. In fact, I'm pretty much there with just a few things to tweak. I'm just really hoping, like, cause we're not the teachers here. We're the students. So we're just waiting for um anyone anyone to come in and give their feedback who knows better. But yeah, if there's nothing else to add, then I'll end it there. Um, so again, thanks everyone for watching, and I believe tomorrow is the 30th. The market should be open, so I'll try to do another end of day review tomorrow, and I will read the Al Brooks Discord group to see to see what was going on there. I am not currently subscribed to the daily webinars with Brad and Rose and all them. So I'll just check through the Discord group and see what they were saying, see if there's anything I missed. But yeah, that should be all for today. So thanks everyone. I look forward to any comments, and I will see you the next time. Bye for now.